Hello everyone, welcome back to Stock Spy. Today we are talking about a move that could reshape the future of Palantir Technologies and even shift how Wall Street views military tech partnerships. We are not talking about a product release, not flashy acquisitions, and not even about earnings. It's something far more strategic. Now, if you followed Palantir even casually, you know this company is built different. They don't sell ad impressions, they don't chase social media metrics. Their customer base is the US government, its allies, and increasingly the defense and digital battlefield. But what if I told you that Palantir just inserted one of its top executives directly into the US Army decision-making unit? One that's designed specifically to pull cutting-edge tech from Silicon Valley into national defense systems. It's real. It just happened. And almost no one is talking about it yet. Let me explain. So here is what went down. Palantir's Chief Technology Officer, Shyam Shankar, was recently commissioned as a Lieutenant Colonel in the US Army Reserve, specifically with a brand new elite group known as Detachment 201. This group, also called Executive Innovation Corps, and is a curated mix of top minds from private sector, handpicked by the military to help modernize how US fight, defense, and adapts to tech threat. And Shankar wasn't the only one. Executives from Meta and OpenAI were also included, making this a veritable all-star squad of Silicon Valley leadership embedded into national defense architecture. But here is why Palantir's position is unique and potentially game-changing. Let's zoom out for a second. Meta and OpenAI are tech giants in their own right, but their defense footprint is still forming. Meta is dipping into defense adjacent tech like augmented reality for soldiers, think battlefield HUDs and training simulations. OpenAI, on the other hand, is exploring how generative AI models can improve intelligence gathering and logistics. But Palantir, defense is already its core identity. Palantir's Gotham and Titan platforms are actively deployed in the field, used by the US Army, the Air Force and NATO allies, and intelligence agencies around the world. Their software doesn't just support missions, it runs them. Now imagine a world where the CTO of Palantir, who deeply understands the system, now sits with the military think tank, helping shape procurement strategies and guide battlefield innovations. That's not just influence, that's strategic embedding. Let's look at the market implications short and long term. In the short term, we might see a massive spike. Wall Street still catching on. But over the next 6 to 18 months, here is what investors should keep an eye on. Number 1, contract accelerations. Palantir may now find it easier than ever before faster to secure defense deals. With an insider who speaks both tech and military fluently, procurement timelines could shrink dramatically. Number 2 is a competitive moat. This move subtly ensures Palantir's long-standing edge over its rivals like Raytheon and Booz Allen, and even Snowflake in defense AI. They are not just selling software, they are reshaping what gets bought. There is also a perception shift. This signal to investors that Palantir isn't just a government contractor, it's becoming an institutional pillar of US defense modernization. Now let's compare the advantages Meta versus OpenAI and Palantir, and let's break it down. Palantir, to start with, is already deep in the game. This role amplifies an existing position of power. It's not about opening doors, it's about walking into the rooms they already helped build. OpenAI, on the other hand, has very high potential. They've already secured a $200 million Pentagon contract, and this appointment could lead to deep national security use cases. But OpenAI's business model is still mostly commercial and experimental. Meta, on the other hand, it's more a strategic win for them, but with softer commercial returns. Their focus is AR, VR applications. While they're valuable, it won't transform the stock overnight. The defense business is still a rounding error on Meta's Adam pair. The bottom line is Palantir has the clearest and most immediate path to monetizing its influence. There are a few risks and uncertainties as well. To start with is the political scrutiny. Government officials entering corporate tech is controversial. The reverse, corporate tech entering military ranks may spark oversight. The perceptions that investors who prefer non-defense or ethical portfolios might avoid Palantir despite its growing potential. But I think this ship has long sailed. Dependencies. There are too much reliance on government contracts can hurt if military budget shift or leadership changes. But Palantir has always played the long game. This move just confirms it. So here is what I would watch over the next few quarters. New or expanded DoD contracts involving Titan, Apollo or AI embedded battle software. Mention of Detachment 201 or innovation advisory roles in federal spending bills. Public perception, media chatter, analyst upgrades or policy attentions on tech military infusion. If Palantir gets even a fraction more embedded than it already is, market will catch on. And when it does, the current 130-140 share range could look cheap in the hindsight. Palantir didn't shout this move from the rooftop. They didn't need to. While other companies chase hype cycles, Palantir just placed a key figure inside a military innovation core, quietly, strategically, long term. This isn't just a tech company signing a government deal. This is a tech company designing what next generation of warfare looks like. That too from the inside. And if markets is slow to realize it, that's an opportunity. Thanks for watching. If you're bullish, bearish, or somewhere in between, drop your thoughts in the comments. If you enjoyed this deep dive, give it a like and subscribe for more market intelligence every week. Till next time, bye-bye.